Okay, perfect. All right. Recording is in progress. Okay. So guys, what we're gonna practically be talking about today is how the market has always moved, right? We That's what we're gonna speak about, how the market has always moved. Um, just hold on for me. Just wanna connect this thing to a charger so that it doesn't give us a problem. Let's see, is it charging? Yeah, it's charging. Okay, so what we're going to be speaking about tonight is fundamentally how the market has always moved, right? This is how I see the market, and you also see that what I'm going to teach you tonight, this is how the market has always moved, right? I believe that once a person understands um, what we're going to speak about today, which is the nature of the market and also the structure of the market, then you'll be able to trade everything. I'm talking about stocks, commodities, indices, currencies, synthetic indices. You will be able to trade those because, firstly, you'll be able to understand how the market moves in terms of the nature of it. What is the nature of the market? Then you'll be able to understand also the structure of of the market. Okay, so I think the first thing first that we're gonna touch, the first thing first I believe that we should touch is the nature of the market. Okay, it's the nature of the market. I feel like that's the first thing that we should touch. The nature of the market. These are the basics of the market. How the market has always moved. Okay, so when we're talking about the nature of the market, right? What we need to understand is that, right, that the market moves in phases. Okay, the market moves in phases. All right, the market has always moved in phases, right? And those phases we have what we call an impulse, right? Correction, and followed by another impulse and correction. All right. This is how the market has always moved, guys. Okay. This is how the market has always moved. The market will move in these phases: impulse, correction, impulse, and another correction. Okay. So being able to identify the phases of the market should really be drilled to your subconscious, right? As a trader, as my student, right? It should be able to be drilled within your subconscious to say that when we speak about the nature of the market will always move in these phases. If the market is not in an impulse phase, the market is in a correctional phase. If the market is not in an impulse phase, the market will be in a correction phase, right? So if you can get that to your subconscious, and the only way that you'll be able to get that into your subconscious is if you practice, right? So the more you practice, the more you backtest. So a lot of people think backtesting is a waste, but backtesting, if you get to think of it, it's practice, right? It's practice. If you can be able to practice, right? Let me say you take, for example, if we speak about currencies, if you take GBP USD and you take it from way back, right? You take it from way back from 1988, 86, when the market started. You'll see that the nature of the market has always been there. The market has always moved in an impulsive phase, correctional phase, impulsive phase, correctional phase, right? So therefore, that will help you understand and embed this idea of what I'm teaching you today about how the market moves, the nature of the market, right? Then you'll get to love and appreciate the pair and be able to know how that pair, you'll be able to know the behavior of that pair, right? So obviously, it is it is up to you to put in the work, to put in the practice, to go and make sure that the nature of the market is drilled into your subconscious. And once the nature of the market is drilled into your subconscious, then it becomes second nature to you. Do you understand? Huh? It becomes second nature to, so the nature of the market will become second nature to you. All right. So if I had to explain what an impulse phase is, right? So if I had to explain what an impulse phase is, right? So an impulse, what would I say? It is a phase, if I would say, in which price will move in one direction. Okay, if I should put it that way, right? So an impulse is a phase. Let me just write it down so that you guys have it also here. So what am I saying? So I'm saying that an impulse, right, is a phase in which, okay, that's English, in which price moves in price moves in one direction. Okay, in which price moves in one direction with what we call with a with a higher or with a high momentum. Yes, let me just put it that way. With a high momentum. All right. Um, so that's what I can say an impulsive phase is, right? I'm also gonna leave it right here. Okay. So if we have to explain an impulsive phase, that's what an impulsive phase is, right? An impulsive phase is a phase in which price can move in one direction with a higher momentum, sometimes than usual, right? And this impulsive phase, you can identify it, guys, in all time frames, whether it's the monthly time frame, the 4 hour, the weekly, the daily, the 1 hour, the 15 minutes, the 30, the 1 minute, the 2 minute. You name all these time frames, right? An impulsive phase, you can always see it in the market. All right. So another thing to note is that, right, when you speak about the nature of the market, is that there's no market that will move consistently in an impulsive move, right? So there's no market that will move consistently in a what? In an impulsive move, right? So there will always be a correction. Okay, there will always be a correction since we know that the market moves in cycles, right? So there'll always be a correction since we know that the market moves in what? In cycles, right? So this correctional phase, this is when the market is breathing. Okay, this correction phase, this is when the market is getting a breather, right? Just like if you run a marathon or a sprint or something, you need a break. Like guys that play soccer, football, there's always a halftime so that people can get a breather. No matter how the game might be impulsive in the first phase, but the halftime, that's where the players get to have a breather. Okay, and in the market, that's what we call a correctional phase. We're saying that the market is in a what? Is in a correction, right? It's just relaxing, breathing before it can go again in its impulsive phase. Okay, so that's how I would best explain a correction. That's what also some people call consolidation, saying, the market is consolidated. We can't do anything. The market is consolidated, right? So one of the good things, right, about the correction is that it's telling us, right, that there will be opportunities for us to enter the market, because that means the market is getting a breather. That means we know that the market is going to go again in its impulsive move, right? And then enter again into another correction where the market will just what? Will just relax and chill. Okay. So I hope you guys understand what I've just explained to you guys in terms of the impulsive phase correction, impulsive phase correction of the market. Okay. So right now, what we want to do is we want to go to the charts. Okay. So that I can show you this in real time, right? We want to go to the charts so that I can show you this in real time as we speak. Okay. what we discussed, you know, with in terms of the first entry and the second entry, those are some of the entry types that we use in the market that are found to be very probable, right? So if we are to speak about the nature, right, of the market, if we are to speak about the nature of the market and what we spoke about, guys, it is this, right? By what I said. So I'll take this, right? So the what we basically saying is we're saying that this is an impulsive phase, right? Then the market will give us this right here. This is what we call a what? A correction. Then we want to see the market going up again, right? So with this, we know that okay, when we see the market doing this, we know that this is our what? This is our impulse phase. Okay, we know that this is our impulse phase right over here. Okay, we know that. Okay, that's our. Just hold on, I just wanna balloon. Okay, balloon is fine. Okay, that's our impulse phase. Okay, because you can see the market move in a very huge momentum to the upside, right? And then this right here, we call this a what? A correction, right? This right here, we call it a correction. So you've seen sometimes on either Telegram or wherever YouTube that people will have these, and you always wonder what is this? What is happening on this chart, right? Why is this person chart so clean, right? It's because that person has just identified a what? An area of, this is what we call a correction in the market. Okay, this is what we call a correction phase in the market. All right, this is what we call a correctional phase. And then what we want after that, we want then the market to give us another impulsive phase. Okay, that's when we want the market to give us another impulse phase. So initially, how we trade is we always want to be involved in the impulsive phases, not the corrections. Okay, so how you are able to identify a correction is when you see that price is giving small candles that you're not sure whether it wants to go up or whether it wants to come down. It's just messy, right here, right? And that is price correcting itself, price breathing before it goes again in its impulsive move to the upside, right? So when price does this, okay, when price does this, it creates what we call patterns in the market, right? So this is one of the patterns that we use in the market, right? This is one of the patterns that we use in the what? In the market, right? This is one of the patterns that we use in the market. This one right over here, right? It doesn't want to circulate properly. It's fine. But this right here, right? This is one of the patterns that we utilize in the market, right? And this one right here, we call it a what? A bull flag, okay? We call it a bull flag, and it's part of the continuation patterns, okay? We're saying that the market is trending upside. So the market gives us an impulsive move, then creates a pattern that we call a bull flag, and we should see another continuation. So what we're saying that this is an impulse, correction, another impulse, right? So some people say there's an impulse, correction, and a continuation of a what? Of the impulsive phase, right? So this right here, we call these patterns that the market creates, okay? We call these patterns that the market creates, okay? So for those that do not have the PDF, I'll send you guys the PDF, right? I'll send you guys the PDF so that you have it, right? And it has the PDF has what you call this? The PDF has what am I saying? I want to say a lot of things in one go. That's why my mind is so stuck, right? So the PDF it has what we call the pattern identifier. So in the pattern identifiers, what you'll find is you'll find that there's continuation patterns and then there's also reversal patterns. Okay. So this right here, what we determined, this is one of the continuation patterns called the bull flag. Okay, to the upside. I hope that kind of helps you understand how the market moves. Okay, so obviously our initial thing, right? Our initial overlook when we see the market, we want to see where the market is. Okay, we want to see where the market is, or what is the psychology of the market, what is the nature of the market as we speak. Okay, so we can see by just looking at cash 500, we can see that cash 500 has been in a downtrend, right? We can see that it has been in a downtrend, and currently price is in a what? Price is in a impulsive phase. This was a correction that we're in, and then there's an impulsive phase. Okay, so if we had to actually zoom it out like that, bring it back just a bit, all right, and do this. Just want to show you guys this properly. Okay. So if you see this, you can see that the market gave us this right here. This was an impulsive move, right? This right here, this was an impulsive move to the downside. You see that the market gave us a correction. Then the market came back again to give us another impulsive move. Then this was just the whole bigger correction that the market was in. All right. This was a whole bigger correction. And then the market gave us another impulsive move, correction, and a bigger impulsive to the downside, right? So you can see that this is how the market has always moved. Impulsive move, correction, impulse, correction, impulse, correction, right? That's how the market has always moved. That's why I was even like, you can even find these impulsive moves and correction on a lower time frame. Let's go to the 15-minute, for example. Let's go to the 15-minute quickly.
Excuse me, Kid.
Yes.
Yes, the screen that you're using, it keeps on changing. Most of the times it's blurry.
Is it? Can you guys see it now?
Yes. So when you stop moving, it becomes clear. Then when you start again showing examples, it's becoming blurry. I don't know if it's just me.
Fine, I'll do this. Just hold on for me. I just want to grab a couple of tools that we're going to use, but we're going to move away from this. We're going to move away from this. Just want to get a couple of tools, then I'll do full screen. Just want to get a couple of, then I'll do. Okay, it's not here. Long position, short position, pause pattern. Then we should be good. So I'm gonna go full screen. Just let me know if you guys can see my full screen. Can you guys see my full screen?
Yes.
Yes.
Okay. So you can even see on the 15-minute time frame that what I just taught you guys about the market moving in an impulsive phase correction, it even happens on the 15-minute time frame, right? If we have a bias on a higher time frame, then we know that the market is what? The market is moving in a correctional phase, right, on the thing, right? I've shown it like this, right? This is one of the patterns that we use. You guys will learn about them. Yes, Emmanuel.
Yes, sir. Good evening, sir.
Yeah, whoa, talk to me, my
Yeah,
good sir.
yeah, sir. In this 15 minutes time frame, this
Yes,
pattern you just drew is the
yes,
correction in higher time frame. But in this 15 minutes now, it looks more or less than an uptrend.
that's correct. It looks more
Are
like
we
an
supposed?
ascending channel.
Yes, it looks like an uptrend in the 15 minutes time frame. Yeah. Are we supposed to trade this market or just wait till it falls in line with the bigger time frame?
It has to be in line with the bigger time frame. So the reason why I'm on the 15-minute time frame is to just show the people that the impulsive phase and the correctional phase, they happen at every
On every
time
time
frame in
frame.
the market, right? But when we look at the market, guys, it's very key. We don't trade in 15. We don't look for market structure in the 15 minutes. Why? Because the market, there's too much noise in the market. We don't know what is happening with the market from a higher time frame perspective, right? So we're gonna right now, I was just showing you, we're gonna get back to the lesson to say that you can see that this is, let me even do this, not to dwell on it. You can see that this was
Okay.
a correction, impulse, correction, impulse. You can see here's another correction, impulse, right? Another correction, impulse, another correction, impulse, right? You can see that that's how the market is always moving in these impulsive phase, correction, impulsive phase. After an impulsive phase, we should expect the correctional phase, right?
Okay.
And then we'll
Yeah.
know that the market is what you call this. The market is moving the way that it's supposed to be moving, right?
Okay. Then, sir,
So
please, the next
yeah,
question. In an
yeah.
uptrend, the impulsive move is to the upside. In a downtrend, the impulsive move is to the downside.
Is that a
How can
question?
we? Yes, no. I said in an uptrend, the impulsive move is to the upside. In a downtrend, the impulsive move is to the downside. How can
That's
we be
correct.
able to identify the beginning of the impulsive move and the end of the impulsive move so that we'll be able to know that we're about to go into the correctional stage?
Okay, I'll show you just now. I'll show you just now. You wanna know when the impulsive move is gonna end.
Yes, when is it beginning and when is it going to end?
Okay,
Because from what you're saying now, we should only trade the impulsive move and stay clear from the correction.
that's correct. Okay, so let me show you guys something right now. Okay, so we've seen that price has been moving in a bearish momentum, which is impulsive phase, correction, impulse, correction, impulse, right? So what I want us to focus on, it is this, right? I want us to focus on this move right here, right? I want us to focus on this move right here. We see that the market did give us a what? An impulsive phase, right? So when the market gives us an impulsive phase and we see it going up, right? So what I do, I use what we call the horizontal raise, okay? So the horizontal raise, I'll mark my low right here. Okay? So I'll mark my low and I'll place my horizontal ray on the low where the market just turned to go to the upside, right? And I'll go and see to say, where is my high that the market has created? So obviously we wouldn't have seen that price is going to create a what? A double top, right? Which is the previous day's highs and lows, right? In terms of the second entry, right? So obviously I was going to use this high that the market created right over here to say what? Okay, if the market comes to that area, this is my key area. That means I'm expecting that the correctional phase will end runabout in this area, right? So immediately when the market comes to this area, what am I looking for? I'm looking for the first entry, which is the star, or I'm looking at the previous day's highs and lows that the market will what? Will create. You get what I'm saying? So those are the two entries that we can look for in order for us to know whether the correctional phase is done or not. Okay, so in this instance, as the market was moving, right? So how we use the trend lines is we use the trend lines just to mark how price is moving, right? We just want to mark how price is moving like this, right? We just want to mark how price is moving. We're not necessarily saying that, we're trading trend lines, okay? We just mark how price is moving. So that we can see which pattern is the market creating. And we can see here that this is more or less a correction, even though sometimes you don't know the name. But if you can just identify to say, okay, this is a correctional phase. So what you're waiting for is, firstly, as a first entry. That's why I said the first entry is quite risky, because that means the market can still continue to go to the upside, right? It's very possible that the market can continue to go to the upside. But when the market breaks out of the what? Out of the pattern, then that's our second entry, right? Or we use this also as a second entry to say there's the previous day's highs and lows, okay? So we can clearly see from this point, right, that this was a bullish engulfing candle. It closed. The next candle that opened, what was it? It was a what? It was a star, isn't it? It was a star that opened. The market came where? The market came where the star is, and then what happened after that? We see that the market dropped to the what? To the downside in an impulsive manner. Do you see what I'm saying? Right? So when the market dropped like this in an impulsive manner, we see that it closed below the what? The correctional phase that it was in. But the market came back again to test the high that it had created, right? And which high was it? This is the high where what? Where the market turned in terms of the what? The first entry, okay? So I hope you guys can see that high, right? It's a new high. You can see it has never been tested before. Even this candle right here, it didn't test this high, okay? So obviously, when we saw this happening, we knew that this is a possibility of the market creating a what? A double top, the previous day's highs and lows. In this instance, which is the previous day's high. You get what I'm saying? Then we know that we see that the market dropped. Okay. So now, most of the time, besides calculating my TP according to the first entry and the second entry, which is 1,500 pips for the second entry, and on the first entry, which is the star, saying that, okay, we're at the bottom of the wick, that's where our TP1 is going to be. Then to get our TP2, we want to replicate the height of the star, and it'll give us our TP2, right? When we're looking at the market from a higher time frame perspective, for me, I know that there's a 90% chance that where the market started correcting at this low, where the market started giving us this correction, the market should come again to that low. And that is where I'm going to take my profits. Okay? That is where I'm going to take my profits. This is what we call the 90% rule, meaning that there's a 90% chance that the market will come again where it previously what? Where it started correcting to the upside. You get what I'm saying? Okay. So now I've answered two questions. Okay. To say, how will we know whether the correctional phase is done? How we know is when the market comes to the high that you can see that this high is visible enough. Price has never come to that high before. And when it comes to that high, you just do not enter the market. You firstly want to see the first entry according to the star, right? This is price action, guys, right? You want to see the market behaving in a certain manner when it comes to that level, all right? When it comes to either that high. Sometimes I call these the key levels in the market, right? And you can see that this was a key level because the market had previously created a high, right? And how it signified to us that the market is going to drop and it's done with its correctional phase is we saw the market creating the what? the star, and then we knew that we can place our sell limits at the top of the star, then ride the movement to the downside. So now that you guys understand the 90% probability, right? The 90% rule to say that where the market, if the market is done correcting, it has to come to this low right over here. It has to come to this low right over here, right? So obviously we would have had a couple of entries right over here. This is the daily time frame that we are in right now. Obviously, we would have taken our TP1 right over here, TP2 probably right over there, and you see the market did go down. I know some people would have probably closed out some profits, but when we saw the market coming again, we would have known that this is the market trying to give us a double top, right? Which is also one of the reversal patterns and also showing us that the market is going to come down. And we see that the market indeed did come down to give us our initial, rather original TP of the 90% rule. Okay, so that's how you know whether the correctional phase is done or not. Okay, you even see with this one. Okay, this one I can even remember. You see, after this impulsive move, the market again entered into a what? Into a correctional phase. Okay, you see that the market entered into a correctional phase. Okay, this was the market correcting itself. Okay, this was a whole bigger correction. This correction lasted for days. Okay, and how you know that the market is in a correctional phase? You'll see that the spikes won't be nice. You can see even here the spikes. The market is just the market is choppy. You can see how the market is choppy right now. That means the market is what? The market is correcting at that time. You stay away from that market until you find a probable place where you can say, okay, you know what? It's possible that the market can, it's possible, sorry about that, guys. It's possible that the market can drop where, and then you take your entries according to that, right? You look for very specific candle patterns, right? You look for very specific candle patterns, which is what you call this. You look for, you know what? Let me just switch off my Wi-Fi because people are still texting, right? So when how we know that price will finish its impulsive phase, right? Is when we need to see the star. We need to see the star. We need to see the market hitting the previous day's high or low. Then we know, right, that you know what, the market is ready to do what the market is ready to turn and go away and give us some sells. Okay, so if I take this out and put my horizontal ray right here, okay, obviously this was the newest high that the market has created, and we see the market did drop and then it came back to that high. Therefore, this area right here, it becomes an area of what? A key level. It becomes a key level in the market to say, okay, that means it is possible. Just hold on, guys. I just want to change something right here. Okay, right. So when the market came to this level right here, we knew that okay, there's a possibility that the market will what? The market has to reverse from this point, but for the market to reverse at this point, we look for very specific price action. We're still on the daily right now. Let me go to the 4-hour time frame. This is a 4-hour time frame. Okay. This is a 4-hour time frame. Ah man. Out. This thing always gives me a problem, but it's fine. Okay, just want to show you guys something. All right, what did I say on the daily? Right, on the daily I said that this was an area, a key level in the market. Right, I said this was a key level in the market. Right, we knew that price has to do something in this area right here. Our interest was going to be when price comes to this area, right? So now let's look at price in this area, what it does according to price action. Okay, we see that the market gives us a what? A bullish engulfing candle followed by a star. And then what happens after that? What happens after that? We see that the market does drop to the downside, right? And it did drop to the downside until it went to go and hit our what? Until the market has to go. That's where we at right now. Sorry about that, guys. My mouse is too quick. It's very quick. So it closes this channel, right? So you can see what happened after that. Okay, you can see what happened after that. The market is still going to the downside. Okay, that's how it was confirmed that okay, this correctional phase that we're seeing on the what, on the daily time frame is what is done, and the market is about to pierce. Okay, and you see that the market did break this correctional phase in an impulsive move, gave us another correction, and then another impulsive move. So if we go to the 4-hour time frame, okay, if you go to the 4-hour time frame, on the 4-hour time frame, even how this what you call this, how this correction ended, you know, it should give us something to say, okay, this was a correction in the market that the market gave us. This was a beautiful correction that the market was giving us on the 4-hour time frame, right? So one of the entries also that we use is what we call the 1-2-3 rule. Okay, the 1-2-3 touch. Okay, the 1-2-3 touch. Okay, and with the 1-2-3 touch, we're saying that our trend line has to touch first, second, and on the third touch, we can expect the market to do what? To reverse to the downside. And we see that the market did reverse to the what? To the downside, closed below the what? Closed below the correction. And once the market closes outside of the correction, then we know that the market is ready to do what? To go to the downside. Okay. So sometimes when we move to the 4-hour, sometimes it won't give you that clean price where we see a star and then we know that okay, the market is about to go down, right? So when the market doesn't do that and it doesn't give us the 1-2-3 touch, we know that we're just waiting to enter at the break of the what? Of the market right here. When the market closes below, when the market closes outside of the pattern, then we know that we can be able to take the market to the downside and do what? Can we also trade the break of the counter trend line? I think that's kind of less what I'm explaining to say, you know, once price breaks outside of the correction, we know that the price is done, then we know that price is gonna go to the downside, right? Remember what I said, where the correctional phase started, you can always place your what? Your TP right over there because there's a 90% probability that the market will always come to where the price started doing what? Started correcting. Okay, you can see that's the low where price started correcting and price did come, hit this low very beautifully to the downside and still continue to give us what? To give us another impulsive phase because this was a correction. No, this was an impulse. Then this was a correction that the market gave us. Okay. If we go to the 1-hour time frame, we'll be able to see this correction very nice and clear. So, where am I? Okay, just hold on for me, guys. I just want to see where I'm at. I just want to see where we are. Okay. Fuck, I even lost where we are. But it's fine. Just for illustration purposes, you guys can see that whenever you see the market, whenever you determine the nature of the market to say, okay, this is how the market is moving. The market gave us an impulsive move. That means this is a correction that we are in right now. This is a correction that we are in right now with the market. right? When you see this correction, sometimes it might be developing. You say, okay, this is where the correction started. Um, Therefore, what am I waiting for, right? You look here on the 1 hour, price did give us a what? Price did give us a star. You can see there's a bullish engulfing, a star. Market respected that star, and price did what? Price fell like a kid. Price fell like a kid. And if you would have held price to your 90% probability, which is where the correctional phase started, then you would have been swimming in deep profits. You would have been out of the market. After that, you're waiting for another impulsive phase that the market will create and do the same thing, right? And you can see right over here, the market did give us another what? Another correctional phase after this impulsive move. You can see that this was an impulsive move. Then the market entered into a what? Into a correctional phase. Okay. This was the market being in a correctional phase right over here, right? This was the market correcting. Obviously, this is not as perfect as I would like it, but you can see that this is a correctional phase. Then the market came to do what? It came and hit your TP where what? Where the correction started. Then you take your profits and you are out of the market. Okay. What I will say is the probability of the star doing well. It's on the daily time frame and on the 4-hour time frame. On the 1 hour, you can see that we do see the stars on the 1 hour, right? But the probability of those stars holding it's quite lesser or lower than on the 4-hour and 24-hour time frame, which is the daily time frame, right? But you can still find the stars on the 1 hour time frame. If you've seen a star on the 1 hour time frame, you can trade that star. Okay, you can trade that star because you can see on Cash 500, it seems like these stars like presenting themselves on the 1 hour time frame, right? And that's the beauty of you guys being able to backtest, right? So this is what we're doing right now. This is more or less backtesting because we're going and seeing previous data, what the market has been doing in terms of what I'm teaching you guys in terms of impulsive phase correction and an impulsive phase, right? So we can see that after the market hit your what? Your take profit, the market entered again in a what? In a correctional phase. The market entered again in a correctional phase. Okay, you can see the market entered again into a correctional phase. Okay, I see. Okay, God bless, bro. Okay, you can see that the market entered again into a correctional phase. This was where the correction started. If we use our horizontal ray right over here, and then what are we seeing right over here? We see that the market price was depleting right over here, right? Meaning that we knew that okay, price is ready for it to do what? To crash to the downside. We see that price did give us a what? Did give us a star, and then what happened after that? The rest is history. What happened after that? The rest is history. Okay, if I had to mark it that way, the star, right? And you are confident to take these trades because from a higher time frame perspective, you know that the market is in a what? Is in a downtrend. Therefore, if you see a correctional phase, you know that you're gonna get an impulsive phase to the what? To the downside with this market, right? And you can see that it did hit our what? Our 90% rule. Our 90% rule. Your take profit should have been here. So you can imagine, instead of you going to look for so many spikes on the 1 minute time frame, if you entered right over here, you would have held this trade up until right over here, which is the 90% probability of our rule. Okay. So you can see, guys, these opportunities, they just present themselves in the market so much, right? You can see this was another correction after this impulsive move to the downside. This was another correction, right? What happened? Market dropped, came and hit your what? Came and hit your 90% rule. It came to hit your 90% rule very beautifully, right? And then the market entered again into a what? Into another correction. Okay, this was another correction right here, as you guys can see it, right? But what I want you guys to actually notice here is that, right? obviously we drew our pattern like this, right? We do our pattern like this to say, okay, you know what, this is a bearish flag, right? This might be a bearish flag, but it's one of the continuation patterns. You see that price did break out of this, right? But failed to come and hit what? It failed to come and hit our 90% what? Probability, where the market started correcting, where price started correcting, right? So when we see the market doing this, we don't panic. Instead, what we do is we evolve our structure. You see, I just took this from here and then we just evolve our structure just like this, right? We evolve our structure just like this, right? And then when this structure evolves, what are we waiting for? We're waiting to see the price action. We see that the market did give us a star. This also might act as a what? As a high, right? This wick right over here, it might act as a high. And you see when the market came to also test that high, what happened? The market dropped to the downside and then came to hit our 90% probability rule and continue to do what? Continue to go down. So you can see impulse, correction, impulse, correction, just like that. That's how the market moves. Okay, Emmanuel?
Yeah. Sir, please, can you go back to the place where you just moved that trend line just now?
Yeah.
Yes. Yes, take the trend line back to the original position before moving the trend line, the original position.
Okay.
Yes. At the break of this trend line, for one like me, I must have entered my trade.
Yes, right over here at the break of the trend line.
Yes, I could have entered my first position. And it did give me some profit for some time, but later did reverse.
Yes.
Yes,
that's
on
correct.
that case, when it's reversing, should I just take my profit or I still hold my position?
You take your profit, right? So what I'm going to also teach you guys in another lesson, in a more in-depth lesson, is that whenever you start being in profits, right, you need to protect your stop loss, okay? You need to protect your stop loss. Let me say, I want to do this shortly, okay? So if we have to use the short position, right? So let's say you entered at the break of that trend line, okay? At the break of that trend line, right? So remember what I said. Our initial TP was where? Was right 90. Over here, where the 90% rule, right? Where the correction started, okay? So we won't worry about much about stop loss. We just want to focus on what? On your profits, your initial running profits, okay? So you can see this was our initial target, but the market reversed, okay? So that means, so how I'm able to count my percentages, guys, right? You see where it says the risk to reward ratio, and then it says 4.21%. That means this move, if you would have entered right here at the break of this trend line and held it to this, the 90% rule, you would have gained 4.21% on your account, okay? Now we're talking about that. We're not talking about pips right now. We're talking about percentages. That means the market would have given you what? 4.21%. If it went straight to the what? To your TP, which is our 90% rule. But if we go up, we see that the market turned at 1.69%, okay? 1.69%, right? So for me, if the market was here, let me say the market was at about, you see where I am, it's at 0.72%, right? I would have moved my stop loss right over there. And as the price spikes, I move my stop loss. I just trail stop. It's called trail stopping, right? So obviously, when I saw price depleting right here, okay, when we saw this star right here and followed by another one, this is what we call price action. You knew that something was wrong right here, because if price is moving in an impulsive phase to the downside, then that momentum should be clean until it gets to your take profit. Then we can start seeing candlesticks playing around, trying to give us a star. Even if the market gives us a star. From this star, the market then should have sold until to our TP. But you see, it gave us 1, 2, 3 stars, and then we're like, this would have been a sign to say, let me get out of this market. You get what I'm saying? But your stop loss, if you were trail stopping, your profits would have been what? Would have been protected because you would have been moving your stop loss accordingly. You get what I'm saying? All right. So, and also when we saw the market going up like this, let me just remove this. When we saw the market going up like this, right? Remember what I said, your highs and lows, guys. Previous days, highs and lows. When the market comes to this high, what are we looking for? We don't panic. We don't panic at all. We just look at price, what it's doing. Is price going to give us a star, or is price going to just turn, right? In this instance like this, because this was just another correction that the market gave us on top of this correction, the previous correction that the market gave us, right? So if we didn't have to kind of evolve our structure, we can say that this is another correction that the market gave us, right? Impulsive phase, correction, impulse, right? And then you see that the market did break out, came back all the way to the downside, right? All the way to the downside. It would have hit your 90% probability with this new with this new correction that it gave you, right? And then the initial TP2, obviously you would have known that it's at the bottom of the bottom right over here where the initial or the original correction started. Okay, so great question, Michael. Emmanuel, thank you so much for that. I really appreciate that, my good sir. Really appreciate it. Okay, so guys, once you see the market moving in this manner, you can never unsee it. Once you see the market moving in this manner, you can never unsee it. Okay, we're gonna have a lot more sessions where I get to explain this, right? So I just wanted to show you guys this with that, it works in synthetics, right? It works in synthetics. It also works in currency, right? It's no different. It also works in currency pairs, okay? It also works in currency pairs, okay? Okay, so what I want us to discuss, okay? We're gonna go to currencies right now. We're gonna go to currencies right now. Okay. On currencies, we just want to see what the market is doing. Which one was I gonna touch? Right? I want you guys to look at this. Where we are right now. This is Euro JPY. Okay, this is Euro JPY. Okay, so you can see the reason why I marked this area. Okay, this is a key level in the market, right? I call this key level in the market, right? Why is it a key level? Because we see that price did come here, right? Respected that level and then went up. But price did come back again and then it broke this level. And then what we're seeing right now, we're seeing that price is what? Price is selling. Price is going to sell in this area, right? Because this is the market giving us an impulsive move. This is a correction that we are in. This is a correctional phase that we are in right now, right? There's a correction that we are in, and we see that price is rejecting at a key level in the market. This is price rejecting at a key level in the market. Therefore, what are we looking for? We're saying that the market is going to drop. This market is going to drop. Trust me, guys. If you have a currency thingy, if you have a currency, if you trade currencies rather, man. Fuck. If you trade currencies, then you can be able to take this move, right? Let's say, yeah, I think 25 pips stop loss should be good. 25 pips, 28, 30. Yeah, 30 is always my maximum, right? 30 pips stop loss is always my maximum if you're gonna enter there. That means you're risking what? About $30 in order for you to make 4.76% in the market. That's what you're risking. You're risking 30 pips in order for you to make 4.76%. 0.76% in the market. That's quite a lot. That's really quite a lot, right? That means from this, if we enter here, we're gonna get 144 pips in profit. So depending what lot size you use, this move can give you really substantial, really good money, right? This is the move I've predicted or I've watched for a couple of days now. So I really know that okay, the market should drop. The market should drop. If you are more of a conservative trader, right, you can wait for price to break out of this correctional phase, and then you can short this market and then take your profit at 128.021. Okay, you get what I'm saying, guys, right? There's something that I wanted to touch, man. There's something that I wanted to touch. Okay, so this is what I would do. Okay, this is what I would do. Let me do this. You guys can see my full screen, yeah?
Yeah, of course, yes.
Yeah.
Okay, perfect. So now I want you guys to write what I'm gonna say down, okay? Or if you're a good listener, or you can go back and to this video, then you can be able to do that, right? But then I'll also send it to you guys if people are lazy to write or they just wanna watch, okay? So the first thing when I look at the first thing when I look at the market, right, is I want to start on the monthly time frame. Let me just start on the monthly time frame. All right. This is a monthly time frame of New Zealand dollar, okay? What other people call the Aussie dollar, okay? People call it the Aussie dollar. So you can see what I'm doing right now. I'm just condensing the chart. And immediately when I do this, I can tell what New Zealand dollar, right, versus the US dollar has been doing since it has started. Since it has started, I can see what New Zealand dollar has been doing. You get what I'm saying? Now, when you do this, you get to see the psychology of the market. Sometimes you get to see where the real market is supposed to go, You can see an impulsive move on a monthly time frame, see a correction on a monthly time frame, and then when you go down to the lower time frames, then it'll start to make sense to say, oh, okay, that means in the long run, I'm looking for the market to what? To go down, to go hit that low that the market created or where this correction started. You get what I'm saying? So if you get to look at Aussie dollar right here, okay? If you get to look at Aussie dollar right here, all right? I'm gonna do this. Where's the ish? This thing when I'm on full mode, it doesn't give me everything that I want. But you guys can see it doesn't give me everything I want. Doesn't give me everything I want, but it's fine. I wanted the bar play tool, okay? Replay tool, okay? So I'm gonna take out price, let's say let's take it out from here, okay? Let's take it out from here. Let's say we didn't know what price is going to do from then, okay? We didn't know what price was going to do from then, okay? But what we have right now, right? I want you guys to look at this properly, okay? I want to bring it closer so that you can see the candle. What we have right now, from what I've taught you guys, right? Who can spot out where is the impulsive move and where is the correction? From just looking at this chart, who can tell me where the impulsive move, where the correction is? Okay, Carl, I see you. So, Carl, you're saying that this is an impulsive move. Right here, you're saying that this is an impulsive move. Then this is a correction.
No, the current, I think, is a correction to me.
This one, you're saying that it's a correction, huh? And
No,
then this is an impulsive.
the move down, I would call it the impressive move, and the small one, I would call it the correction. Then the market moved down again.
Perfect. You guys, that means you guys are listening. That means you guys are listening. Well done. You guys are listening. That's good. That's good. That means you guys are really listening. How can I take out these things? How? Can you be able to take them out? The annotations. Thank you so much, my good sir. Thank you so much. Okay. So remember, guys, what I said, right? Is that the same rules that we were applying on when we're backtesting crash, as I'm teaching you the nature theory and the structure of the market, it is this. What we're talking about even now is the structure of the market, how the market has always moved, right? So I will take my horizontal ray, right? So that I use the horizontal rays just to keep my charts clean sometimes, right? Just to keep my charts clean. But you can also use the rectangle. I know some people use the rectangle, right, to say that was a key level. That means these things are low. You guys can still hear me properly, yeah? Okay. Well, yeah, that means they low. I need to charge my AirPods. I've been using them the whole day. And then what we can also see is that this is a what? This is the low that the market created with the impulsive move that we are in, with the correctional phase that we are in, right? So as the market is moving right here, we put our what? Our trend line to say that, you know, this is a correctional phase that we are in, because you can see like the market just keeps on buying, sell, buy, sell. You don't understand what is happening, and you don't want to be involved in this market. Not that it's not tradable, but it's not as profitable, right? We always want to we always want to find ourselves in these impulsive moves that the market is giving us, right? So already when we're seeing this move, guys, we know that, okay, you know what? We know that our initial TP price needs to come here when it gives us another impulsive move, right? And then obviously this is the monthly time frame, right? This is the monthly time frame that we are in right now. So let's go to the weekly time frame. Let's go to the weekly time frame. The weekly time frame will be able to even give us more depth. Okay, it will be able to give us more depth to see what price is actually doing. All right. So the reason why price tend at this point, you can see, right? It's that it came to test a high that the market had created. Can you guys see this, right? You can see this on a weekly time frame perspective, okay? You can see that price came to test what? This high that it had recently created, okay? That's why the market actually moved away from this high right over here. So if we go to the daily, we might see a star or some sort of price action that the market gives us, right? Might see a star. And you can see when you go to the lower time frames, what ends up happening. You see more and more, even price becoming clearer in terms of, oh, this is a star. This is a correctional phase. This is a ascending channel, right? You get to see all these reversal patterns. This is what we call patterns inside of patterns. But you can see just from looking at the monthly time frame, going to the weekly, coming to the daily, you can see price unfolding the way that it's supposed to unfold, right? To say that this is a key level that we are in. This is a key level that we are in terms of market structure, right? And what are we looking for right here? We're just looking for our price action, for price to give us a what? For price to give us a star. That's one thing that we can look at. For price to give us a star. Did price give us a star? Yes. Here's a star. Price came back to test that star. What happened? Then we see price moving away from that key level. Okay, we see price moving away beautifully to that key level. Remember, our initial TP. You can have so many TPs right here, but our initial TP is where it is on the monthly time frame on that low that is on the what? On the slow, right? On the slow that is on the what? On the monthly time frame. Okay. So I just want us to go to the daily time frame and just to see how price unfolded. Okay. I just want us to see how price unfolded from that level. Okay. I want us to see how price unfolded from what? From that level. Okay. Elvis, I see you have a hand up. You can speak. Uh,
Can you hear me?
yes, we can hear you now.
Yes. Please, can you take the chart back to that star where you just explain a star formation now?
Okay.
Okay. What kind of star is this? Can we call it a bullish star, or this one is a bearish star? Is there
It's
anything
just a
like that?
star. There's no bullish, there's no bearish star. Go back to the pre-recorded videos that I sent on the group. Okay, that's
Okay.
where we discuss where with the one that I wrote, the first entry, that's where we discussed the star, right? As one of the price action entries that we can use in the market, right? To say, how do we know that the correctional phase is done? Then we should be looking for the what? For the star. And the star will give us a really good entry and a good confirmation that price is ready to what? To either reverse to the downside. Okay. So a
Okay.
star is a star. There's no way to say, and in that session, I do say that, I'm not saying that this is a morning star. I'm not saying that this is a hammer, because there's all these sort of names that we have given these candlestick patterns to say, this is a morning star, this is a hammer, this is a hanging man. For me, this is a star. I know that when the market has created a star after a bullish candle right here, then I know that the next candle that is going to form after the star, this candle needs to do what? Needs to drop, needs to take us to the what? To the downside. Okay. So if you go and look at that lesson, it will
Okay.
help you quite a great deal.
My question is, what if that the candle that just formed before this star is a bullish candle, sir? What if it was a bearish candle?
Okay. So that video explains everything. Okay. I just don't want to dwell into that now.
Okay.
Just go and look at that video, and then it will explain everything. Okay. Not that I don't want to answer the question. It's just that if you go to that video, it will answer every question that you have. It will literally answer every question that you have. Okay.
Okay, sir. Okay, sir. I will
All
go
right.
back to the video, sir. Yes, sir.
All right. Thanks, bro. All right. So, like I said, right now, after we confirmed at this key level, we saw the star, and then we see the market drop. We just now want to see, according to a higher time frame perspective, how this market unfolded. Okay. I think, yeah, let's just use the bar tool. Okay. So on the bar tool, we can see that the market is literally going down. You can see that the market is going down. The market is creating a what? Still going down. It's crazy. Still going down. That was a star. Let me just pause right here. This was a star that the market gave us on the daily. You can see it. This is a star. Bullish engulfing candle star. Then price, fell to the downside. Um, this is super beautiful. This is super beautiful to watch, guys. This is an impulsive move that the market is in right now. Let's see if the market will correct. The market is currently in a correction. Market is out of the correction. You see? Another correction. Impulsive. Let's see. Means the market is in a whole bigger correction right now. That's true. That's true. We had a key level right over there. That was a key level right over here. See the market going up, 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 up. I won't play the whole of it. I just want sneak peeks. Okay, so you can see, guys, how the market has moved, right? So obviously, from the monthly time frame, you have your initial bias of where the market needs to come, despite it doing anything, right? But you can see here, this was a key level right over here, right? So we might say that this was a even head and shoulders pattern, right? This was a inverse head and shoulders. You can see it, right? Left shoulder, ahead, right shoulder, the market went up, right? We would have entered, to enter the probability of entering into a head and shoulder pattern, for me, it's at the break of the neckline, right? You wait for the neckline to be broken, then you enter and then hold it to the upside, okay? So we see that this was quite a very beautiful head and shoulder pattern, inverse head and shoulder pattern. Then the market changed direction to go to the downside, and this is on the lower time frame because we saw this move or anticipated that the market needs to go down from a what? From a higher time frame perspective. Okay. I just want to go to the monthly and play this out on the monthly. Just play this out on a monthly time frame. Okay, just want to play this out on a monthly time frame. Let's see what the market is doing. Market went up. Just want to speed it up just a bit. Just speeding it up just a bit in terms of time purposes. Where the market did trend on the lower time frame, that might have been a star on a lower time frame perspective. It might have given us a star. See the market dropping very beautifully to the downside. See the market dropping. Remember our monthly take profit. Remember our monthly take profit. This will help you a great deal in saying, that means I can hold this trade for the whole month and you will not panic because you know that from a higher time frame perspective, this is where price needs to come. This is where price needs to come. You can hold this price for as long as however you want. But you'll know that that's where price needs to come. Big swing, dude. This was a big swing. This is what the big boys look for in the market. This is what the big boys are looking at. They're looking at a higher time frame. Guys, that is where the money is. The money is at a higher time frame. The higher time. Look, if we would have focused at this, if we would have seen this, let's say the market was where it's at this correction, we would have known that this is an impulsive move. This is just a correction, and this correctional phase, it will end. And we know that the market needs to come to this take profit right over here. We would have been you would have held this for like months, literally, because this one candle is just representing the whole month. Let me just speed it up just a bit. Just speed it up right a bit, and then you see that it did hit TP. It did hit your TP. Truly, this was more or less where your TP was if you were a credit trader. Hey, look at that. Look at even how it hit TP. You are out of the market. Big swing.
So this trade lasted for like a whole year.
The whole year. If you knew if you knew, hey guys, this is crazy. What I'm teaching you guys, it's amazing. Honestly speaking, it's amazing, guys, right? If you saw this impulsive move and you know the nature of the market and structure, you would have known that this is a correctional phase that we are in, and that we are gonna be out of this correctional phase. And once we are done with this correctional phase, what is going to happen? We're going to go down. And once we go down, we never stop until we go and hit our 90% probability gap. That's why this is called the 90% probability, because 90% of the time the market will come and hit that take profit. Even if it takes a year, even if it takes 6 months, even if it takes 2 weeks, the market will come and hit your take profit. Always, 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 always. Don't, Emmanuel, this is guys, this is practice. This is practice, 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 practice. That's it. It's all about practice. It's all about practice. That's it. It's all about practice. Okay. So what I wanted to more or less say, guys, is that you know, after you, okay, I think that's it. This is a clean chart. Okay. After you know, we utilize the multi-time frame analysis, right? Or let me just do this and explain as I speak. Right? Yo, wow. Okay, so this is GBP USD. Okay, pound dollar. This is pound dollar. We're studying it from the monthly time frame, right? We can see the psychology of pound dollar. Okay, we can see the psychology of pound dollar. We can see that pound dollar gave us an impulsive move. This was a correction. This was a whole bigger correction that the market gave us. You can see it. This was just the whole bigger correction that the market gave us, right? From the monthly time frame perspective, guys. This is a what? This is a correction that the market gave us. So you always want to connect your trend lines, right? According to the, you know, the points, the highest points that you see the market creating, right? You always want to mark the highest points, right? You structure always develops. Obviously, maybe we would have said, okay, this is our correction, right? This is our what you call this? Our correction pattern, right? Would have said, and you can see here the market did break to the downside. You can see it gave us the 1, 2, 3, third touch, the market dropped to the downside. But then the market evolved. And when the market evolved, you evolve with the market, right? That means you tweak your pattern so that they can fit according to the what? According to the recent market structure, according to how it has evolved, right? So you can see that this was a whole bigger correction. The market gave us another impulsive move. This was a correction, impulsive move, correction, impulsive move, right? So for me, I can see that, you know, okay, this is where obviously our 90% rule was hit. Okay, this is where the correction started. You can see that the 90% rule was hit, right? The market impulse got into a correction and then got out of the correction and gave us an impulsive move. And then, you know, our take profit was going to be there. You can see it was hit very beautifully, right? Very beautifully, but we're not focusing on that right now. Then you want to, you know, go to the weekly, and on the weekly time frame, you know, you want to see how the market did from the previous week, right? You want to mark your your key levels that the market has given you, and take it from there, right? You want to mark your key levels that the market has given you. You can see here, this is a key level right over here, right? And why we call this a key level in the market, we're saying that whenever the market comes to this point, depending how the market is moving, we're going to look for price action to say, let's look for the star either to go to the upside or go to the downside, right? So key levels, they help us with that, right? They help us with that key levels. You can see even here, this is a key level that the market has given us, right? This is a key level that the market has has given us, right? So one might say that this was an impulsive move to the upside, correction, impulsive move. We are in a much we in a bigger correction in terms of uh, pound dollar. Someone might say that. So pound dollar is in a correctional phase in this manner. So therefore, on a bigger time frame perspective, they wanna be looking for the what? They wanna be looking to take pound dollar to the upside, right? People wanna say, okay, we wanna take the pound dollar to the upside to this key level right here because that's where the correction started, right? It kind of makes sense. It kind of makes sense if someone really wants to take it in that direction, saying that this was an impulsive move, correction, want to see the market going to the upside, right? So when we go to the lower time frames, what we always look for on the lower time frames is our bias, right? To say is let's see the market giving us that impulsive move to the what? To the downside, right? Sometimes it will present itself, sometimes it won't present itself. You can see right here, this is a key level on the daily time frame. This is a key level right here, right? The reason why price spiked the way that they spiked is because of the Ukraine and Russia war that is happening. So if you check the DXY, the dollar index was going up, the dollar was gaining strength. Therefore, when the dollar was gaining strength, all these pairs that are against the dollar, like the GBP USD, it had to what? It had to sell because the USD was what? Was being stronger on the DXY. Okay. So that is the whole reason why the what? That is the whole reason why this market actually sold so impulsively to the downside. Okay. So some other people might say, you know what, on a lower time frame perspective, this was a really beautiful impulsive move. I want to look for a correction, then take this market again to the downside. Okay. So higher time frame, guys, that's where the market is. Start analyzing on a higher time frame. Utilize the multi-time frame analysis and what we call the point of view top-down approach. The second thing that you want to do is you want to identify whether price is in an impulsive phase or a correctional phase. That's very key. You want to identify that. Is price moving impulsively or price in a correctional phase? After you've identified that, you want to identify whether if the price is in a correction, right? Let me say, for example, say price, you can see that, okay, price is in a correctional phase. The thing you do is you want to identify whether that correction is a continuation pattern or whether it's a reversal pattern, okay? So for those that do not have the PDF where it has the continuation patterns and reversal patterns, you'll see them, right? You want to find out, okay, this correctional phase, is price going to give me a double top? Is price going to give me a head and shoulders? Is price in an ascending or descending channel? Those are all reversal patterns that the market gives us, right? And then from that higher time frame perspective, then you can be able to have your bias to say, okay, if the market gave us an impulsive move this way, we need the market to give us a what? We need the market to give us a correction right now, right? We need the market to what? To give us a correction, right? And then we want to see the market dropping again to the downside. You get what I'm saying? So that's what that's what you're looking at. That's how we are able to backtest and focus. That's why you are able to anticipate these moves way before, because you know the nature of the market and how price moves. To say after the market has had an impulsive move, the market needs to breathe. The market needs to give us a breather. That's why the market is correcting. Yes, Elvis. We can't hear you, Elvis. We can't hear Elvis.
Can hear.
Elvis, can you guys hear me properly? Can you guys hear me properly?
Sir, please, his mic is being muted. You should please help him
Yes, we
unmute
can
his
hear
mic.
Sorry?
Elvis' mic is muted. Please help him to unmute his mic so that I can be able to speak out.
I tried to unmute him. I don't know what's happening. I tried to unmute him. It says ask to unmute.
Okay, let me just call him and talk to him.
Yeah.
Okay,
Sure, Junior.
how's it going, bro?
Good, my good sir. How you doing?
I'm great, thanks, man. So one thing that might lead us to confusion is the fact that on the bigger term frame, we want to see that we head into the upside, right?
Yeah.
But what GBP USD just did there, perhaps some of us weren't expecting this type of movement, because now from the bigger term frame, we have a perspective that we should be heading to the
upside.
To the upside, yes.
It's the news, my good friend. It's the news.
Nah.
The news will fuck you up. Let people say news will fuck you up, Baba. This is what they're talking about.
That's the main reason why I hate currency pairs.
Yeah, the news. But what I know is most of the time also, guys, is that, you know, the news sometimes will be in line with the structure of the market. Sometimes the news will be in line with the structure of the market. I can understand why some people would have wanted to take this to the upside, especially from a lower time frame perspective. Say that, you know, if you see this bullish engulfing candle, you know, this was quite a good impulsive move. They might have said, you know what, this is the market correcting right here, you know, therefore they were looking to take the market long, you know, but then the market, you know, decided to come down, and it just didn't come down today, you know. Remember what I posted. For me, what I saw is I was seeing that, you know, the market more or less wants to give us a head and shoulder pattern kind of a thingy right here, thingy majiggy, right? And you can see I saw the market that drop, you know, and then when I saw the market with this impulsive bullish candle, I was like, this thing then probably wants to shoot up. And then the next thing you see the market is falling the way that it's falling, right? And it's because of the DXY, guys. If you know the DXY pair, right? This is a dollar index. You look how this thing played out. You look how this thing played out, guys. That's the reason why the dollar sold, became stronger. You can even see here, this didn't respect structure. Okay, according to this structure, you can see that this is an impulsive move. This is a correction. Where did we need to go from here? We needed to go to the downside. Does that make sense? To go and hit this what? This 90% probability rule. You see how news affect price. News really affect price. That's why I believe what Emmanuel said, a lot of people don't trade currency pairs because of this cuck that is happening right here, you know, that, you know, the dollar can be able to go up and people will go and short GBP USD. Because one thing when you trade currencies, let me say you decide to focus on your, you know, all the pairs that have USD, like GBP USD, Euro USD, what is another one that has a USD, Conch? In the end, you can see that all the
AUD USD.
Yeah, you know, yeah, you can AUD USD, there it is, right? So if you look at the DXY, which is the dollar industry, the dollar index, right? This is saying to us that the dollar was gaining strength to the upside. You can see that it reached about what, $97, right? Up. You look at GBP USD, and this is just today. What happened to GBP USD? Sold. You look at Euro USD, what happened to Euro USD? Sold, right? And you look at even the structure. Look at the structure of Euro USD for a second. look at the structure of Euro USD, right? Just helping you just to see the structure of Euro USD, to see what happened here. What were we looking for? After this impulsive move, we're looking to go up again with Euro USD. But instead, what did the news say? The market brought it down. See? Fell. You look at AUD USD. Sell. You know? USDs are, it went up, obviously. USDs are, it went up just like that. You can see this whole move to the upside of USDs are. Okay. But yeah, guys, this is market structure. Obviously, it's something that we cannot finish in one night. As we do our sessions, you'll be able to learn new things and be able to evolve, right? And the more you evolve, it's the more you become a better trader. But from what I have given you guys, this is magic. From what I've given you guys, this is super magic. Honestly speaking, and it's magic. It's literally magic. So this will even help you to know where more or less the market is going to go. All right. It will help you more or less know where the market wants to go. When you analyze the market properly, you know, you'll be able to see that, oh, okay, that means the market in this instance, it wants to go to the upside or it wants to go to the downside. So even when you look for the stars, you look for the stars according to the appropriate direction of the market, because you understand the nature and the structure of the market, right? Same, guys. Same. We'll be able to kill it. We'll be able to kill it. Okay, so any questions, guys, before we close?
No, it's been a great lesson. We are learning in a bit. I'm sure we'll get used to it.
No, definitely. Stick with me, guys, and you know, you guys are gonna learn valuable things. You know, you're gonna learn valuable things that will be able to help you to change your perspective on the market. You know, you'll be able to see the market in a very different eye, right? Once you learn that this is how the market moves, you'll never go wrong, guys. This appears, guys, whether it's boom and crash, whether it's step index, whether you are what, hey, market structures everywhere. The nature of the market is everywhere. You can see it literally everywhere, the nature of the market. You can literally see it everywhere, okay? Let me just, before we close, just want to show you something on step. I want to show you something, guys, on step. Where's my MetaTrader? But from next week, guys, we're gonna start trading currencies. We're gonna start trading currencies also next week, and indices, right? I've gotten into what you call this, an affiliation with Trade245. They approached me saying that they want to work with me. So if you guys need a broker, I'll send you the link. Then you can register on Trade245. Then if they give you problems, you can always escalate to me. Then I'll take it up with them since I'm in an agreement with them. But you know, if you sign under me, obviously, you know, if you sign obviously using my link, okay? But let's just look at step index.
That's massive. That's massive. Congratulations, bro.
Thank you so much, my good sir. Appreciate it, man. I don't even know where they got my number. Well, I think on Instagram.
On
Man,
Instagram.
Yeah. They
Now
got
you're
my
doing your
number on
thing, man.
Instagram.
Keep up the good work, man. You're killing the shit.
Thanks, my good sir. I appreciate it, man. When other people see it, especially brokers, that means you are doing something good, man.
Nah.
Yeah, that means you're doing something good, man. Like legit.
So one thing about brokers, are they able to milk the market as much as we do, or they're just looking for those people who making the market so that they can work hand in hand with them?
Yeah, they also kill. They also trade, these brokers, because remember they're also traders. I think they understand also, the market,
Yeah.
and how it moves, and I think they're also traders. But I don't think because since for them it's like their work, I don't think they're allowed to more or less, trade
Right.
using it's a conflict of interest kind of a thing.
Okay.
So I think they'll probably use other brokers. Okay,
Nice.
but
Yeah.
but thank you so much, bro. But just a quick one before we close, right? So if you see step index, you see step index from a monthly. If you look at it, this is how I start looking at. This is how, when I start trading, or when I say I'm analyzing the market, this is what I start doing. I can see that from a monthly time frame perspective, we're on a monthly time frame. I can see that the market gave us a big impulsive move. This was a whole correction and another impulsive move. You get, like, easy just by looking at it. I can tell that this was an impulsive move. This was a correction, another impulsive move, right? I go to the week, right? Go to the weekly. And on the weekly, what do you see? The same thing. You can see there's that impulsive move. There's that correction that we saw, right? There's that correction that we saw that the market created, right? Obviously, it would have been right over there. It's the downtrend market. That's correct. The downtrend market, okay? Can see that the market gave us this correctional phase that we're in right here, right? And when the market created, obviously we would have had our pattern right here. We wouldn't have known that the market will come right here. So when the market immediately dropped out from here, we were like, okay, we're gonna drop until our what? Until our 90% rule. We're gonna come and hit our stop loss at our TP at our 90% rule, okay? You see it. I hope you guys are seeing what I'm teaching, because this is how the market has always moved. Yes, Emmanuel?
Yeah, so from this pattern, during the course of our lesson, I guess this should be the second time that the market has been repeating such. So it seems like sometimes, even after breaking our pattern, the market does seems to go back to go retest the high before finally moving down to the 90% rule.
That is very correct, my good sir. You saw even that on a currency pair. We even saw this on a currency
this like
pair.
the second time I'm saying it.
That's correct, my good sir. That is very correct. And I'm glad, because I was even going to mention it to say, can you guys see that this is the second time we've seen this kind of a move, and on a higher time frame perspective, right? On a higher time frame perspective. So obviously, once you see this move, you see the market getting out, you don't panic. When you see, you don't have that fear of like, oh, the market has gone down, it's gonna go to, no, you relax. You relax. You draw your key level right over here. This is your key level. You see what I've drawn right now? This is my key level right here. I know that when price comes to this zone, there must be something that must happen. And I have confidence that the market will go down. Why? Because I can tell that this was an impulsive move. This is a correction. The market needs to still go to the downside, okay? So let's go to the daily. See what the daily has in store for us, or how that move played out from that point onwards. See how it played out from that point onwards, okay? Okay, so it did come here, give us a star, but the market didn't come and retest the star. Instead, the market continued to fall, go down to the downside. Let's go to the H4. I just want to see if the H4 gave us something substantial to take this market to the downside. I want to see if it gave us something. Where are we? I'm so confused right now.
No, just right there, man.
right here, né?
Yeah. That's it.
Right here. Almost lost it. This price can get too much sometimes. Okay, I see it. Okay, right. So that's why we're saying that, you know, the market came back. That's why we're saying that the market came back. As you can see, all right. So sometimes the market won't give you a clear star pattern to say, you know what, we are going to the downside, right? So obviously you can see that this was a whole bigger correction, right over here, as the market was going to the upside, right? Always keep that in mind, especially when you go down to a lower time frame, right? Especially when you go down to a lower time frame, that, you know, patterns get created inside of patterns, and you need to know that, right? So if you don't have a clear picture of, okay, the market is going to maybe drop here, it's given us a star, then the market is gonna fall, you know, you wait for price to break out and close below. You wait for price to break out and close below. You look at how the next candle is doing, and then you can take your thingy. You can take your entries to the downside, right? But you see that the start did present itself right over here, right? Even though it's in an imperfect place, really, it's in an imperfect place, but you can see that the star did play out after all. It did play out, and then it just fell. And we knew when the market fell where we look into to take the market, right? We knew when the market fell where we look into to take the market. Is someone joining? Okay, yeah, Sloman is joining. Okay, we knew where we taking the market, right? So even when we go to the lower time frame, you know, what is the initial bias of the market, that the market is going down and it needs to go and touch our what? Our TP that is right over here. Yes, Emmanuel? I saw Emmanuel had his hand up. Now he can't speak. We can't hear you, Emmanuel.
No, sorry, sir. It was the hand I raised previously.
No problem. What's up? Oh, you raised it previously. Okay.
Yes.
No problem. Okay. But you did see that the market initially did go and hit our take profit that we had anticipated right over here. Okay.
Yes, sir. Yes.
Came, hit it very beautifully, and still continued with how it's been moving, right? In terms of impulse, correction, right? And remember, guys, also that as the market is creating these corrections, right? As the market is creating these corrections, most of the time how the market reverses is at a key level, right? Also sometimes what we call the previous day's highs and lows. You get what I'm saying? Someone might say, well, this is a high that the market created. Obviously, we've seen this on the daily, but on the 1 hour, it will be even much clearer. You can also use zones to say that, you know, this is a zone where if price comes here, price needs to respect the zone and go to the what? And go to the downside. So it'll just depend how clean you want your chart to be. Yes, Emmanuel?
Yes, the thing, from what I'm saying, is just like we really can't compare our own knowledge to that of yours. You've been in this business for a very, very long time, so you've gotten yourself familiar with most of this pattern. But from me looking at this stuff now, the market did show us that he had wanted to reverse because we've got double top confirmation there. Even just after the break of the structure, our 90% rule was hit, we got into another state of correction again. And at that point, the price created certain level where it couldn't break above.
True.
I guess with time, we'll definitely master this stuff.
That's true. That's why I'm saying that with back testing, the more you back test, it's the more this stuff, it's going to be so visible to you. It's going to be like second nature to you because you've seen these moves happening so many times. Even the lot sizes that you use, it's just going to be easier. The market is like, it's going to be in your blood. You will know where price is going. That's why I always preach about the importance of the higher time frame perspective. That's why I'm always teaching about the importance of a higher time frame perspective. Say, guys, there is money in a higher time frame perspective. If you can learn to see what price is doing at a higher time frame perspective, then trust me, like you will always do well. You will always do well. You know what I'm saying? So obviously, even where price is right now, we're seeing that, you know, we at a very key level right here. This is a key level that the market is in. We call this key levels that the market is in, right? To say the market is in a key level right now, right? So there's still potential that the market can, if it hasn't broken this key level and closed below it, then that means the market has potential to go to the upside, right? It's very possible that the market can go to the upside, right? Very possible that the market can go to the upside, right? So if we have to put this trend line in the sense to say, okay, let's see if the market is going to close above, and then let's see if we can take it to the upside and then to go and test this key level that the market created right over here, because also this is a key level that the market has created. Let's see if the market will come, maybe hit this key level, then come down to break this key level right here. Emmanuel?
Say, my battery is almost flat. Hope there will be recorded copy of this section.
Yeah, no. It's recorded. It's even long. Okay. This one you're gonna cry, you guys. From 10.
No, you've tried yeah. That.
But I think it's a good session to go and check. No problem, guys. The meeting is recorded. If you miss something, you'll be able to go back. Okay. But I think with step index, that's what we should be looking for, to go long, to go hit this key level right over here before we can come back and probably have hopes of hitting this, breaking this key level on the downside right here. Okay, you can see it even gave us a double bottom right here, previous days highs and lows. That's why the market actually is shooting up the way that it's shooting up. So thank you so much, guys, for attending the session tonight. I really appreciate everyone that came through. Let's go and kill this market, guys. Let's go and kill this market. Go and back test according to what I've taught you tonight. Then you'll see your trading improve, man. It's all about practice. Put in the work, put in the hours. If it means that you're sleeping at 3, you're sleeping at 4, you're sleeping at 12, analyzing the market, back testing the market, then those that will pay. That will pay at the end of the day, guys. You know, that's how the universe works. You know, when you put in the work, you will reap the rewards. It's that simple. When you put in the work, you'll reap the rewards. It is that simple, guys. Okay, it is that simple. Okay, so thank you so much, guys. Let me just close off this meeting, let this recording convert, and then once it's done converting, I'll send it to you guys on Telegram. Okay, so have yourself, guys, a good night. Those that are still gonna be up, let us be up and analyze this market and see what we're looking at for tomorrow.
Okay, thank you very much, sir. Thank you.
Thank you so much.
Cheers, ladies and gentlemen.
Thanks so much.
Cheers, guys.